This is Michael Malone with Bloomberg Intelligence. I want to thank everyone for joining us for a Bloomberg virtual roundtable event, Cryptocurrency as an Asset Class. We hope to get some insights and learn about some opportunities, provide some, and I fully, as a moderator, expect to learn plenty myself. In this space, I have to admit, I guess some people might say I'm becoming more senior now. It makes me feel really young just covering it, because I find cryptocurrencies, most notably Bitcoin, is, before I looked at it as evolutionary, and this year I think it's proved it's somewhat revolutionary, most notably as it's really entering the space for mainstream adult investing. I view it next year as becoming part of the 60-40 mix, and that's part of why we have this event with some notable investment managers and consultants in the space to discuss where it's going, how we should get in there, how to explain this space to clients. And one notable thing I've sensed from some of my former colleagues, been in the space for a while, who run money now, is when they talk about cryptocurrencies, I have one colleague tell me lately he's a bit fearful to invest with his clients because he's afraid of getting sued, partly because of risks. And some of the main vehicles are an ETN, or maybe vehicles that might be considered somewhat dicey. But one thing that Bloomberg has done in the space is we've launched the Bloomberg Galaxy Crypto Index. We did that with Galaxy, and it's been a very good partnership. So it's happy to coordinate with Galaxy on this event. And I remember discussing this almost 4 years ago with my senior index team and with Bloomberg, thinking we have to get an index in this space. So to me, I look at this space as I don't see what it's going to take for it to continue to mature and for prices probably to continue to rise next year. And I'm looking for all the little potentially forks in the road or volatility nuances that might prevent that, things that might prevent things that I can't expect or can't predict. But we want to move on to our participants, and I'll start with Steve Kurtz of Galaxy. Steve, you want to take it from here?
Yeah, thank you so much, Mike. And thank you, Bloomberg, for hosting. And to our panelists, there's some friendly faces, which is always nice, and some new faces, which is fantastic. I'm the head of asset management at Galaxy Digital. We're a TSX listed public company with 100 people focused on the blockchain and digital currency space. You may know Mike Novogratz, our CEO. He's a macro hedge fund trader from Fortress by background. In our asset management business, we've got 500 million in AUM. About half of that is to our Galaxy crypto index fund and our Galaxy Bitcoin fund. And we're, as Mike said, very excited to have a longstanding partnership with Bloomberg. 3 years ago, we built an index, the Bloomberg Galaxy Crypto Index, that really hits on the crux of what we're trying to accomplish today, which is talking about crypto as an asset class. And that was about defining the parameters and the rules and the methodology, and really setting a foundation on which this asset class could grow and be discussed. More recently, we launched the Bloomberg Galaxy Bitcoin Index, which is another example of that same mission. I think today, this conversation is particularly timely. And just to put a finer point on that, last week we did a conversation with the RIA channel, and we found that about 3 in 4 FAs have gotten a question in the last 12 months about cryptocurrencies and Bitcoin in particular, but only 14% feel very prepared to answer those questions. And I think a third of those felt not at all prepared to answer those questions. So the mission at Galaxy Fund Management is to close that gap. We want to be a trusted partner to advisors. We want to help people navigate the new asset class. We really want to have those sort of comprehensive discussions about not just cryptocurrencies, but why now? How does it fit into a portfolio? Mike mentioned the 60-40 piece. I fully agree that crypto is going to be a part of that sooner than we expect. And I think the other reason that it's really timely is that the macro environment really necessitates a different approach to talking about portfolios. I think the digitization theme that's emerged from COVID, alongside the macro inflation theme, is really important. I think investors are used to growth because we've had the longest bull market, perhaps of all time, and or we're getting there if we're not already there. And then you look at an 18% deficit in the US, you look at 277 trillion of global debt, that's a 5 to 10 year rationalization period. And you need to start to think about hard assets. There's a case for Bitcoin there, and you need to think about digitization. There's a case for digital assets there. So, it's a new space. It's an exciting space. We've made a lot of progress in the last few months. We're going to talk about that today. And I think we just look forward to a discussion of how it's matured and developed over the last 3 years. hear about the experiences of the panelists, maybe the questions that they're getting from their clients, and just explore this a little bit further, and really appreciate everyone's time. Mike, back to you.
Thanks, Steve. Let's start exploring. One of my rules and these type of things is to tee off our speakers, get out of the way. So maybe since we have plenty of good people with a lot of knowledge, let's start with me. I mean, you can kind of flag when you want to speak. We'll try not to speak over. So let's start with Tyrone. Tyrone, can you help me and our describe what you think you're seeing in the space and where do you expect this to be going in a year from now? My sense is, put myself ahead a year from now, is we might have an ETF in this space where it'd be accessible for Bitcoin or cryptos for an average person. Right now, what I see is the average millennial can make 6 to 8% on their cryptos. And when they think of value stocks, they think, why would I bother? Can you help guide me where you think this is going? Where do you think your clients are? Are you seeing interest and demand? And are you facilitating that?
So again, as a licensed IA, and then also as a CEO, is trying to build solutions for advisors. I have a really unique perspective here because I know all the choke points, I know all the issues, and it's funny that you mentioned that 6 to 8% is not even on the table for financial advisors because of the fiduciary responsibility to be like, you can't even go there yet. So the demand is robust. We're seeing incredible demand at OnRamp, and we haven't even launched yet. But the thing is this, I do think an ETF is coming. I think one of the things for financial advisors that folks need to understand is there's been a tremendous build in infrastructure the last 3 years that is going to allow financial advisors to finally, one, engage and just simply have the conversation. I speak to financial advisors every day. Again, I am one. I have a lot of my friends in the spaces. One, financial advisors don't even know how to start the conversations with their clients. So the end result of an ETF or anything else, they're not even there yet. They know an ETF will take some of that off of the table because whoever gets an ETF approved is going to arm them with research. They're going to take the qualified custodian apart away and everything else. And I will stay here. I've done so many of these, and it's never geared for the advisor conversation around the things advisors need to be prepared for, especially as I look at the screen here, so many of, in investor committees, right? I had a conversation with a large RIA. I want to believe this last week, $35 billion. The owner of the RIA said his investment committee isn't even prepared to have the conversation. So what I've realized now is there's demand from retail clients and my clients that I'll still work with. And on the RIA side as well, robust demand, a lot of questions. What's never addressed are the 4 things that need to be addressed especially if you are SEC registered. Let's forget the 60% of financial advisors, RIAs, that manage 50 million or less. If you are SEC registered, you have to discuss or be aware of, 1, qualified custodian. That hasn't been the easiest thing to answer in the space. The SEC just gave us an update on November 9th. Still a little iffy. They're putting it on the IAs. The manner in which assets are going to be held. There's not a financial advisor in the country that can explain to a regulator the manner in which crypto is held. A reasonable, air quote, reasonable expectation of a client statement. I ask all advisors and those that I'm consulting with now, who do you want your clients getting statements from? And the last, and I'm sure all these gentlemen on here know, is that surprise independent audit. When the SEC comes knocking and they want to audit, you're going to have to tell them everything that you're doing, how you're doing it, what's the process that you use for qualified custodian, what was the research that you use, all of these things. The truth is this, there are better questions for advisors than there are answers right now. I think this is one of the things that will get us there, but the gap between what advisors can and should be doing is huge. What we want them to do and what they need to do is even bigger. The goal is to get that squared away and smaller through proper infrastructure, qualified custodian, advice from FINRA and the SEC. Hopefully at some point the SEC and CFTC gets together and give advisors an armed, booklet on how to handle this. But the long-winded way of answering your question, yes, I do think we get an ETF, but even if we do, advisors still need to be armed about how to have these conversations with their clients.
Well, that was an awesome start. I think you did a good job describing the nuances risks and potential opportunities in a real nascent space. Now, Donald, you raised your hand. Let's go to you next and then off to Brian. Donald, your turn.
Yeah, no, I think Tyrone raises some excellent points, and I would say there's 3 or 4. I would reframe how we think about this discussion for a moment. I think that the promoters of cryptos as an asset class have to better learn how to have conversation with advisors before advisors can learn to have better conversations with clients. So the challenge that I have, and I'm probably one of the bigger skeptics on this panel with respect to cryptos, is, Mike, you referenced 6 to 8% expected return. Where does that even come from? How is that grounded in financial theory, right? What's the business case for Bitcoin? What problems does it solve for consumers? I don't think any of that is really clear. I'm, as the CIO for a $25 billion fiduciary, these are the questions that we have to answer, is how can we make a compelling case that this asset class is driven by more than just momentum, that it's not just the shiny new object in the marketplace? How do we make the case that Bitcoin creates value for consumers, right? If you think of traditional fiat currency, it actually does provide a service, right? You use it to pay your taxes. You can't use cryptos to pay your taxes. So that's what's missing. So number one, the expected returns, where does that even come from? How do we think about that? I hear a lot about the low correlation of cryptos to traditional asset classes. How do I know that that's not just data mining, right? Correlations are only important to the degree that you have assets that actually have positive expected returns. And it's not clear to me that cryptos, for any logical reason, would have a positive expected return. So, and I think Tyrone rightly points out all of the regulatory concerns that RIAs have. So I think these are questions that I've raised that, frankly, I do think the promoters of cryptos can answer these questions. But I think a lot of RIAs who are held to the fiduciary mandate, those are the questions that we have to answer before we, with integrity, can add a new asset class, Mike, to like you say, the 60-40 asset allocation sort of flagship model that is so popular among retirees and Main Street investors.
Much appreciate those questions. I will not touch them. We can address them later. Maybe some of our other guests can. I know Steve wants to, but we'll have to get back to you. Let's go to some of our guests a little bit. Brian, you had your hand up, so I think you earned to go after Donald. We'll get to those. I'd love to address them, but let's go start with you, Brian. What's your thoughts here?
Yeah, thanks so much. I think just taking a step back from the question and some of the initial responses is just trying to appreciate, what trends have happened dramatically over the last 12 months, and really from an advisory perspective, sitting in the middle, where we're getting information not only from our investors and our clients, but at the same point in time, we're trying to stay educated about trends that are happening in the industry. And my view is that you're seeing more of a thrust of institutional leadership within the financial services sectors, within publicly traded companies that are interested in making investments in crypto. There's obviously been always ongoing evaluation from regulators. And of course, when you hear about an asset class that's had a good performance, people start asking about it when they look at the last 12 months or so. So I think it's our responsibility to recognize what cryptocurrency is right now. And it's an alternative asset class. It's not a traditional stock or bond. You can write an investment thesis around it relative to concerns about inflation. But where we are right now is that it's storing value. And that value has not been 100% unlocked because we haven't seen the formulation of traditional processes play out within the financial services industry in a consistent basis that is more pervasive within our real economy. And so as a result, I think, we have to be sensitive to the fact that this is an ongoing development area where we're seeing more leadership from institutions right now leading the charge. But as the process mechanics play out, I think a lot of the questions that were brought up before will be answered, and we'll be able to do a better job and try to explain that to a client who's willing to take an investment in the space from a longer term view. For those in the short term that are willing to allocate assets to this investment, I think as advisors, we need to understand what those risks are and make sure that the asset allocation is part of a client's portfolio, whether it's an endowment, a pension, or an individual's IRA, is just sized appropriately because of some of these unknowns. And so again, we look at it as a hedge to some of the macroeconomic risks that are out there due to post-pandemic trends that would play out. But at the same point in time, there's still a need to know before you can really get behind it, as described before, in trying to make an investment thesis around other asset classes that have had a little bit more stability historically.
I think that need to know is a common theme that we can touch on. Tom, any thoughts? Would you like to go next?
Sure. Yes. No, I agree with what Brian said in that as advisors, it's incumbent upon us to just right size the allocation given some of the concerns that were raised earlier. But it does have a role in a portfolio for some clients, not all clients. And again, the key is just to think about it from a allocation percentage standpoint in light of the problems or some of the regulatory hurdles that still are yet to be conquered, that you just don't make a huge bet on Bitcoin or other cryptocurrencies, but have it in there as a role, because it does play a role to store value trade, as was mentioned. It's definitely a hedge in light of all the fiat currency issues going on with all the money printing. So we do like its role in a portfolio and we like its prospects, but and going back to Don's point, we don't have any way to really a tangible way to figure out return expectations because it is a bit of a trend momentum play right now. But we do like some of the features that it brings to the table that differentiate it from other asset classes. So we are supportive, and we do like its prospects.
Mike, I think you might be on mute.
I knew that. You're supposed to just be able to read my lips. Sorry about that. No, Charles, sorry about Charles. I was trying to be polite as I was typing notes because I can't write. Charles, your turn.
So I certainly agree with some of Donald's concerns and our fiduciary duty to better understand the asset itself, what role it has, pricing, stability, transparency, all of that. And Tyrone's points related to regulators and the duties that we all have from a compliance perspective, extremely important. We don't know all the questions, let alone the answers. But to me, what is really clear about this space, what highlights it for us as a fundamental manager that invests across asset classes directly in individual businesses, is that the impact of the technology and the application of distributed ledger and what that means for a disruptive force for financial services is huge. This technology that Bitcoin and crypto is built on will probably be the most powerful force that we see in the next 20 years, 30 years, as it relates to financial institutions, how trade occurs, how settlements occur, the speed of capital. It's massive. So from our perspective, while we do want to spend time understanding the role of this in the portfolio, which today, if you look at large endowments, Yale and others, have made allocations in the space that are around the 1% number, right? But the implications for much larger parts of our portfolio is, to me today, much more important. So while we want to think about Bitcoin and other cryptocurrencies in an asset allocation perspective of hedging macro risks, I want to spend even more time understanding the implications, the broader implications for other asset classes and sectors within equities and fixed income.
Thanks. Much appreciated. I like that macro view. Kent, thoughts? Your turn.
Thank you, Mike, and I'm happy to follow the last speaker because I think I'll expand upon some of the final points that he made about its implications for other parts of the financial industry and diversified investment portfolios. But I'll start by just confirming what others have said, which is that in our business we're seeing a very growing interest in cryptocurrencies and digital assets. It is certainly greater than a few percent of our client base, but probably still less than 10% that have directly inquired with us. But our expectation is that that's going to continue to grow very, very rapidly as the asset class dominates the headlines in many ways. To date, as others have said, we view our job to educate primarily, and then to help them find the most efficient, cost-effective, and secure way for them to allocate a portion of their wealth to the assets. We tend to bifurcate the conversation into two parts, Bitcoin and then other digital assets. Most of our clients are interested in being educated on how Bitcoin could and may already act as a store of value, and in ways can look similar to digital gold. And there we talk to them about the potential for the asset to act as an alternative currency over time, a means of payment in some ways, but also an asset that can be used for settlement purposes over time. And all of those have potential to contribute to its store of value over time. In other words, increase the total market capitalization of the native asset Bitcoin over time, or the network, however you like to think of it. Then we move on and talk about the underlying technology behind Bitcoin, but also other cryptocurrencies or digital assets. And there is where I'll just delve into for a few more minutes the conversation about its implications for the financial industry or other industries as well. And this is an oversimplification, but for client communications, we find it effective. We talk about other digital assets as technology platforms or networks that may provide solutions over time, but it's undetermined yet whether any of them will actually be the optimal solution for the problem they're trying to solve. But they could also be used as a means for the exchange or settlement of securities. They could be used to store data, arbitrary data, really data of any kind. They could be used for consumer payment purposes over time. All kinds of different technological applications, but in that way, they all very much resemble an investment in technology, just a different way of accessing or investing in the technology, which maybe they're less familiar with. Previously, working with a firm like ours, they would have made investments in technology through the public and private markets. They could have done so on a passive basis, or our team at Tiedemann could have evaluated an active investor in the public and private markets to make those investments. And we explained to them that they may not be aware that they're already participating in this ecosystem, because active managers that Tiedemann has hired on their behalf, especially within the public market, the private markets, are already active. Now, to date, most of the investments made and the only realizations to date have been investments that facilitate transactions and exchange of the currencies. So exchanges that I'm sure many of you are familiar with, digital wallet as well. But over time, we may see those same investors invest in the technology in different ways. But our advice to them today is that it's best left, if one's going to do so on an active basis, in the hands of those experienced technology investors that we've had success working with for decades and have already proven to be early and successful investors in the ecosystem.
Thanks, Tom. Keith, any contributions, any thoughts?
Sure, thank you. I think, Don, I may be with you up in the realm of skeptics, but as Steve mentioned, we are starting to get a lot more questions from clients driven by, I'm not sure if it's genuine interest in the technology or a fear of, hedging against policy mistakes, or just fear of missing out. It seems a little bit more like it's interest in the momentum, especially as you start to see some larger name investors, whether it's, Druckenmiller and others kind of at least give it some credibility as they've made some investments. The challenge, and I'm curious about it, and I'm really trying to understand is, right now the scarcity argument is significant, right? And that's a big driver of the momentum. But if the business case of the technology becoming more established as a means of exchange plays out, isn't that a little bit contrary to the appreciating asset argument? Meaning, if I know if I feel that this is an appreciating asset, I'm not going to buy a house or a car or other hard goods with it, because why would I give away something that I think is going to appreciate? So you have competing interests, right? To some extent, like gold, where it's often viewed as the hedge against everything that can go wrong, if cryptocurrency is the answer to every problem, it starts to contradict itself a little bit, right? It can't be a regular means of transactions and also have tremendous upside, because those two are in direct conflict.
I think we're at the perfect halfway point. And I know someone's just smiling here to get involved with Steve. So let's start with some of the counterpoints that Donald and Keith brought up. And the key thing I look at it is, I'll just tee off a little bit, is I look at Bitcoin as very simply as a collectible in a digital world. And I don't know why anybody would want to spend it unless they have to, because there's only going to be so many of them, and there's growing demand. So one thing, I'll leave it to Steve after I make this point. There's a prominent internet entrepreneur from Argentina named Wences, who points out, for Americans, money is like water to a fish. So to tee off Donald's question, what business case is it? For the rest of the world, money can be a problem. Your currency can be a problem. And so we'll start with some of those questions. First of all, Donald mentioned about the business expense, the 6 to 8% returns, where do they come from? And Steve, wherever you want to go with some of those things that really need to be addressed, I'd like you to take it over.
Yeah, I mean, these are great points and great questions. I'd love to keep the debate going. I don't think cryptocurrency is the answer to everything, and I don't think it should be portrayed that way. And to Don's point, I actually think the fund managers and the crypto community have done a relatively poor job over 3 years of actually framing this. And it is complicated, so it's hard to deconstruct the different pieces of that. And to hit Kent's point, I think that's a really logical framework. I think if you start with Bitcoin and expand to other coins and then the technology, you can pull apart the threads. And really, that all came from this white paper in 2008 that built Bitcoin, but was fundamentally multiple computer science innovations all wrapped into one. This idea of digital scarcity, this idea of a decentralized network being resilient and robust and strong, this idea of a digital wrapper called a token, which ultimately doesn't have to mean anything. It could be an improvement of ETFs to have a token wrapper because it plugs into WhatsApp. There are many ways, and I very much agree with the bigger picture that irrespective of what you would do or not do in cryptocurrencies, we've reached the point where it's now becoming irresponsible not to understand the technology. The fundamental point is that the payment rails of the future are going to be digital. There's going to be a fungibility between digital assets, whether that's Bitcoin or whether it's US dollars on those rails, or whether it's your Delta loyalty points. The backbone of the payment system is being rebuilt. It is going to be digital. It is going to plug into the major tech platforms. And frankly, one of the big questions for the US from an innovation perspective and a competition perspective is, how are we going to keep up with China? China is doing far more in this realm. They're very close to a digitized renminbi. They've already got the rest of the wallet infrastructure and ecosystem built out. And so there's this really interesting East-West dynamic that hits on geopolitics, it hits on money, it hits on networks, it hits on technology. And all of this is wrapped into the same conversation of Bitcoin. And so it's very challenging to have a conversation about any of this without going very big picture, but also being very specific. The one thing I will say is that I do very much agree as it relates to client conversations about an investment, with the idea that there's Bitcoin and then there's everything else. The reason that I say that, we talked about qualified custodians. The fact is, for Bitcoin, there are qualified custodians. For the rest of cryptocurrencies, that's not always true. So if you look at Bitcoin, you can have a New York DFS licensed SEC qualified custodian, and Fidelity and ICE are examples of that. And so the infrastructure around Bitcoin is far further along from a regulatory framework perspective, from a service provider perspective, and then also I think from a use case perspective. I don't think of Bitcoin as a medium of exchange. I think that there are different lanes within cryptocurrencies. I think store of value sits alongside payments. I think payments sits alongside Web 3.0. And I think that the index that we have with Bloomberg kind of parses that out. When you look at Bitcoin, what's interesting is you can not like it from an investment perspective because it's early. You cannot like it because it doesn't have cash flows. We try to chip away at that with modern portfolio theory and correlations, but that's not going to give you the full answer that you would have in other asset classes. But ultimately, what I think has changed today relative to a year ago is that Bitcoin itself, and forget the rest of the cryptocurrencies, which are different, Bitcoin can no longer be rejected from an ODD perspective, an operational diligence perspective. It can be dismissed from an investment perspective. It's volatile. I don't understand the use case. These are all questions we should debate and discuss. But from an ODD perspective, we now can say with a straight face, there are regulated exchanges with real spot volume in the billions every day in the US. There are regulated futures and options markets. There are qualified custodians. There are service providers that you've heard of before. And so that starts to be really interesting from now we can go have a practical investment conversation and debate. I think that's a foundationally different place than a year or two ago. And I think other cryptocurrencies are still catching up to that. They don't necessarily have the infrastructure, the depth of the market liquidity, or the use case that Bitcoin has, although they're very interesting for different reasons. So I could go on for hours about that, but I think that's the core point. And I think there's been some really thoughtful framing of different pieces of this. And when we talk about cryptocurrencies and as an asset class, which is this overall discussion, I think it's really important to start to talk about the lanes differently because they have different levels of depth and therefore different levels of investability and suitability for clients.
Well, that to me is the key thing. Is the way I look at it is I just have this fearful, always trying to put myself in the future. Grandpa, why didn't you invest in Bitcoin? It was only so and so, and if Bitcoin ceases to exist, the question will never come up because no one's going to care. So I really want to go to Donald next, because I need to hear the skeptical things. The key thing is I hear about sec lending when you listen to people like Al Krasinski runs Celsius. It's digital savings accounts are simple sec lending. And the way I look at every day that goes by that you can clunk down a Bitcoin or Ethereum or a digital dollar and get 6 to almost 10%, that it doesn't fail. Simple rules of economics means money has to flow that way. And to me, that's what happened. That's what really struck me earlier in the year when my son, who's a millennial, pointed out that, Dad, I just made 20 bucks in my crypto account. He had like nothing in there in interest. So Donald, I love that smile. I want to punch holes in this theory that, that standard 1% I'm hearing for this year is picking up to 1 or 2% for the next few years for this Bitcoin thing.
My 17-year-old is now recently, reminding me, hey, Dad, why is your company not investing aggressively in Bitcoin? Interestingly, in 2018, 2019, he didn't bring it up, right? Back in 2017, he was, late 2017 was arguing, Dad, the world has changed. You should be, investing in Bitcoin. It's kind of hard to argue that something is a reliable store of value when it lost 85% between late 2017 and the bottom in 2018. So I'll be the first to admit that it's a big marketplace. There's a lot of room in the marketplace for non-traditional asset classes. And every time I have this conversation with professionals around Bitcoin and blockchain technology and digital payment systems, the conversation always slightly pivots. And I think there's a big difference between investing in Bitcoin, which is a product of this type of technology. There's a difference between investing in that and investing in the technology directly. So to Charles' point, I'm really excited as an investor in looking for new and innovative ways, novel ways to invest in better digital payments technology. There's a huge demand for that, obviously, given the digital world that we live in. But there's always that slight pivot. And one of the things that's missing for me, and I think for a lot of my CIO colleagues, is how is investing in Bitcoin a proxy for investing directly in digital payments technology? Standard Charter, Northern Trust, they're going to launch a custodian, a qualified custodian, I think, to hold digital assets. Those are the sort of things that I'm looking to see. How can I invest directly in those types of endeavors rather than the actual Bitcoin itself. So it's just an interesting pivot, Mike, that I see all the time in this conversation where we talk about Bitcoin, we then pivot, we talk briefly about blockchain technology, and then we pivot back to as to why that, that's supposed to be a rationale for why we should be investing directly in Bitcoin. And I'm having a hard time connecting those dots.
Well, I like that narrative because I think there's some tremendous investment opportunities in terms of equities that are exposed to the space, and we won't go there. But one thing I wanted to point out is I penned a piece recently. Bitcoin's not a store of value yet, because its volatility right now is 3 to 4 times the volatility of gold, the 260-day basis. On its standard trajectory regression analysis, it's going to match volatility of gold in 2024, which is the next halving. So let's look forward. To me, once Bitcoin gets to a higher, massive, a much larger base, it's a store of value. Right now, it's getting there. To me, that's where the opportunity is. And I don't know. I have to think every day, what's going to go wrong with that? And Tyrone, you had your hand up, so floor is yours.
So a couple of things. A couple of things I wanted to say. First, I think it's my responsibility to educate here, build an infrastructure for advisors. So the first thing I think is really important. Fidelity Digital Assets put out a report that said there's 3 things the institutional investors and large RIAs care about: manipulated market, volatility, and lastly, I think the one that's important to the folks here is how do we value this thing? There are ways to value it, right? MPV, stock to flow, realized cap. I think using market cap for Bitcoin is still a little wrong. I think realized cap is a little more important. But I say that to say there's a book that I tell all financial advisors, all RIAs, they must have in their office. It's Crypto Assets by Chris Berninsky. Might be heresy what I'm about to say, but I believe down the road that will be the intelligent investor of our space. I tell every advisor, you're not going to get fired because you don't put your clients into Bitcoin. You will be fired because you're not conversant. You haven't set up your practice to have the conversation. So when that client walks in, you're doing year-end reviews, that client walks in, slide them a copy of that book and say, I'm reading this, you read it, we'll get back to this conversation. None of the folks here, you don't manage multi-billion dollars and lose a client over an asset because you do holistic financial planning. You help their children graduate from college. You help them retire. They're not leaving you over Bitcoin. They're going to leave you because you're still calling it baby brains. That's the first thing. Second thing that I want to say, which I think is very important, is this. There are qualified custodians. Qualified custodians for RIAs. The SEC says those that are qualified custodians now took the state charter. If they took the back door. If you, Mr. RIA, use that qualified custodian, you have to give us the process by which you made that decision. Does that qualified custodian, air quote, have the same responsibilities that a qualified custodian that we've deemed qualified custodian? Can it do the same things? Another thing here for all the advisors watching. You should be a fiduciary so long as you are putting the client's best interest first, and you are making decisions and advising that client on all asset classes. As far as being a fiduciary as it resides to crypto, give it away. Let the custodian be the fiduciary to be able to archive, safekeeping, things like that. Draw a fine line here. You may not want to be a fiduciary when it comes to crypto in terms of, again, fulfilling your responsibility to give advice in best interest of the client, sure. Fiduciary in terms of, again, archiving, saving, manner in which the assets are held, you may want to leave that alone. Last thing here is this, how I get people to understand this. There is Bitcoin, big B, the blockchain. Bitcoin, little b, the token. Big B, little b Bitcoin and big B Bitcoin are the same thing in the fact that the little b Bitcoin is Bitcoin. The big B Bitcoin blockchain can live without it. Bitcoin right now has one inarguable use case. It is a godsend to the unbanked all around the world, and especially here in America. You cannot argue it. No one can argue it. So is Bitcoin a currency? 1,000,000%. Here in America? No. Is it money? 1,000,000%. Here in America? No. Is it a store of value? No. Is it digital gold? Perhaps. It's a whole bunch of things, but the one thing you cannot argue, it is the most impressive, besides this thing, but you put this together with Bitcoin, it makes it that much more powerful. There is nothing in the world more powerful for the 1.7 billion unbanked in the world than Bitcoin. It is the one inarguable use case that I wish we would spend more time talking about. and ran. Sorry.
No, perfect, Rand. Thanks for the suggestion. I'll take a look at crypto assets. One thing I am a sucker for is digging into the space. And I want to move on to some people with hands up. I think, Brian, you have your hands up. But before we do that, I want to address, when we look back at this year, if I'm long enough to live old enough to be able to do that, I think to address what Donald said about that 85% correction in Bitcoin and that big draft this year, I think people say, well, is that the year that crude oil, the world's most significant commodity, traded negative 40% in the stock market, and its worst correction since 1933? Yeah, that's the year. So that kind of addresses this year's correct. I had to see your smile, Donald. This year's drop in Bitcoin. Donald, you had your hand up. You're next. I'm sorry. My fault. Brian, unmute you.
Sure. Yeah. Just going back to I think earlier comments that were made. I think we're really not trying to take a huge leap of faith within this asset class as a predictable investment vehicle. I think what we're really trying to do at MJP Wealth Advisors and working with our clients is exactly the points that other advisors made, which is, trying to, help from an education and advice perspective so that people understand what they're investing in today. But as another, panelist mentioned earlier, it's about that opportunity of a structural process playing out within the economy that I think the true value of Bitcoin or blockchain in general is creating an efficiency for transactions and financial ledgers to be managed. I think you can make an argument in the short term due to the impacts of monetary policy, influencing valuations of asset classes, that maybe cryptocurrency is an alternative to gold or other asset classes to hedge inflation. But I truly believe that those investors that we work with as our clients that are allocating crypto as part of their investment portfolio is thinking about it more as that longer term kind of structural enabler in changing processes within our economy. And to Tyrone's point, you see more emerging market economies using blockchain and cryptocurrencies as a means to facilitate payment. And I think that is kind of the longer term direction. And I think to Don's point, why this gets a little bit confusing is because people bring in obviously some short-term investment thesis around the potential. And I think it kind of creates this short-term versus long-term debate. Obviously, we all do a better job in managing client assets, looking at risks over the right duration. And I think that's the transparency, that we're all struggling to kind of achieve for our relative client base and thinking about it accordingly.
Thanks, Brian. Hands up. I think Charles. Charles, you have your hands up?
Yes. Thank you, Mike. So at 1919 Investment Council, one of the things we do is manage money for multi-generational families. So we've been around for a long time, 100+ years. And education, I think a little bit what Tyrone was talking about, in the holistic way of all of us as investment advisors, financial advisors do, working with our clients to educate and empower people is really important. So Bitcoin gives us an opportunity to connect with that next generation millennial population. We might be working with 4 generations of the same family, right? The top 3 probably don't want to mention Bitcoin. And if I mention Bitcoin in a room as the CIO of our firm, they're going to question our sensibility. But if I mention Bitcoin, or if I don't mention Bitcoin with the 4th generation of the family, they're going to question my sensibility, right?
Say you're an old guy.
Right. I'm this old white guy that,
Right.
I'm irrelevant, right? I have 5 daughters. They tell me this on a very regular basis, right? But so it brings up this opportunity to, one, stay relevant and stay connected, and then to introduce the basic investment concepts of what are asset classes? Why do you use certain tools? What's the role? What's the idea of an inflation hedge? What is systematic macro risk? How do you match up your liabilities and your assets, and is there mismatches? What will this do? But then to showcase the fact that as a firm, we're taking the concepts that are embedded in this, the technology, and trying to understand the implications for the broader portfolio, just like Internet 1.0. There were a lot of businesses that went away in E.com, Internet 1.0, e-toys, e-this, e-that, right? But it was a great experiment. Capital was thrown at things with almost out an expected return. But it allowed us to create the foundational investment platform and business platform for what is now the internet, right? Businesses went away. There was discovery. This is exactly the same thing. Coins will go away. They won't all stay. There's thousands of them. Bitcoin seems to be, a survivor, let's call it. So to me, it's all part of what we do, being relevant for our clients, appropriate mixes of assets, and the opportunity to educate and bring it into the larger context. That is extremely valuable for our firm.
Much appreciated. We're getting towards the end here, and Kent and Keith. Kent had your hand up, and I'd like to make sure we all have fair time. So Kent, you had some comments.
Sure, thank you, Mike. I wanted to tie 2 points that have been made together. Sorry, I need to center myself here a little bit better. The idea of the expected return and the notion that it is for many, especially outside the U.S., the point that Tyrone made, that it is in many ways acts as an alternative currency for the unbanked, or simply for those whose currency they actually trust less than Bitcoin, and they aren't really able to access or invest in, say, the 4 major fiat currencies of the world. When we have conversations with clients, we explain the differences between investing in Bitcoin and investing in gold. Gold has centuries of acting as that form of alternative currency, and it is a relative value asset, right? It is not possible to assign a valuation to gold like you can a financial asset that has associated cash flows. You can talk about it in relative terms, and you can try and explain over long periods of time, movements in gold tied to changes in real interest rates. For U.S. investors, it's somewhat inverse relationship with the value of the dollar. You can talk about demand from central banks and emerging markets like India that can be drivers at times. But unlike gold, of course, there are some key differences today. Number one, something that's already been mentioned, our clients have used Fidelity as the custodian, but we do have to talk about the differences between Fidelity digital assets and the other traditional custodians that we use to hold all other assets. And of course, if you use a custodian like Fidelity digital assets, the costs associated with holding and trading are considerably higher than they are with gold. Now they're coming down, and we expect that they'll come down more over time. But the point is that if you talk about Bitcoin as that type of an asset, not a financial asset, but a currency that has a relative value to it, then you can begin to talk to clients and educate them about the potential for its market cap or its network to grow significantly over time, even if it only takes a tiny % of the market share that gold is used for throughout the world, even if it doesn't become a legitimate asset that central banks of the world would hold in their reserves. You can also look at it from an emerging market point of view, as Tyrone was saying, and say that even if it displaces a small percentage of the uses of those currencies over time, its network can grow considerably. There's no perfect way to do that, but for anyone that's interested, I would highly recommend a paper that ARK Investments put out on the subject. It's one of the most effective that I've seen to date. And then the second one that I just want to revisit, because I'd like to, I agree with it, and then and talk about how this is why this is how we explain it to our clients. The point that I believe Donald raised about the fact that we always tend to pivot. We talk about an investment in Bitcoin, but then you very quickly pivot into a discussion of the technology. I think in our case, that stems from the fact that our clients, when they come to us, being educated for the first time don't understand the difference, and we need to educate them on the difference of the two. And then our point of view is evolving, but for now, as I mentioned earlier, our point of view is that it's not clear to us that any other digital asset or Bitcoin of itself is the right way to invest in the technology over time. There will be strategics that develop the technology and will have, will be the primary benefits of the value themselves. And there will be, venture investors and other forms of investors that will develop this kind of technology outside of a coin. We'll continue to leave it to those experts in that domain to make those kinds of investment decisions for now.
Good stuff, Kent, Keith, and then Tom.
I'll just put out a question for those that are implementing for clients. What have you found to be the most effective vehicle or way to do it? Right, there is an ETF, I believe. Right, there's a great scale Bitcoin ETF, but it's got big premiums, and so I don't know if others have a preferred mechanism or see something on the come that they think is particularly promising.
Let's do a final word from everyone after we have a word from Tom. Tom, any thoughts on some of the previous? Because I want to make sure you get your equal time.
I appreciate that. Actually, Keith, the tool that gets most of the attention right now, and there are other products out there, but the Grayscale Bitcoin Trust is the sort of closed-end fund vehicle that it does trade at a premium or fluctuates premium or discount. I haven't seen a discount in a long time though. So that's the tool that we happen to use for like the easiest access to it. It's able to be held at our custodians. I think it's interesting. Charles brought up a point. There are, a couple more than two, I think close to 3,000 mothballed digital currencies already. So there are currencies that are coming and going. So I mean, it's true. Bitcoin just seems like it's emerged this year, certainly as the clear winner in the cryptocurrency world for now. And I think all the skepticism and issues that have been raised are all real valid. However, I mean, this year has been such a big turning point in sort of adoption or acceptance, in that you've got major corporations, publicly traded entities taking millions and millions, hundreds of millions of treasury dollars and parking it in Bitcoin instead of cash because of all the fiat currency fears out there. And these are major corporations. You've got obviously big investors, as referenced earlier, Stan Druckenmiller, Bill Miller, Ray Dalio, et cetera, talking about, we're making allocations to Bitcoin in our portfolios. So you've got just lots of things going on that just haven't been in place before. In addition, you've got platforms like PayPal, 350 million customers, making it available to them to buy and sell, just through the use of PayPal. So there's lots of sort of adoption and acceptance events this year that are transitional, that really state the case that this is for real. This isn't fly by night. This isn't something that's, you can argue the speculative point, but I think the adoption point, it's just winning right now. And so I think people have to, as you guys said, people have to be educated and understand, or at least look into it, investigate it, and consider it for a portfolio. So that's why we're more bullish than some of you guys, and have been adopters for a long time now. So it's been a good year.
So thank you, Tom. We got about a minute left each. I just want to make one key point in question. The key thing that got me really bullish in gold in 2018 was when the VIX 50-week moving average dropped to the lowest ever. It's got me, same thing. I looked for mean reversion in 2007 and 8. This was a little bit early. So I see the biggest challenge for you and for us, most notably you, in the future is an underperformance period in U.S. stock market. I hate to say it, a potential bear market. If history is a guide, at some point we'll get one, which is part of the reason I'm quite still bullish gold and Bitcoin, because I see trends in debt to GDP and MMT and QE and all that favoring more stores of value. I hate to say it, but it's just facts of the market cap of stock market, the highest ever versus GDP. So let's start with Steve. Let's do a roundtable. You just get about a minute. We're going to be done about 1 o'clock.
Yeah, sure. I just wanted to respond and fully recognize it as a fund manager, the bias, but I do think we talked about fiduciary duty and doing the right thing for clients. And when we talk about Grayscale as a structure, I want to be clear what it is and what it isn't. So it's not an ETF, and it's not even an exchange traded product. It's a listed OTC trust structure. And that has a lot of considerations. There's a 6-month window if you're subscribing via the private placement. there's a premium in the open market, and then there's actually no redemption feature. And so from a Galaxy perspective, we've chosen not to build that structured product because we wanted to build a product that we thought would be more appropriate for institutional investors. And to us, that means having a redemption is a core feature. And so we've gone the private fund route where you can have world-class service providers, but some friction. And then we're also building a mutual fund in Canada where you actually can be on exchange on TSX with that redemption feature. So no disrespect to Grayscale, who's built a big business, but I do think that there are some important things. I think the misperception is that this has liquidity in all environments. And one of the considerations, if you're going to buy and hold Bitcoin instead of trading it, which I would advise basically everyone to hold it, not trade it if you're going to engage with Bitcoin, is you do have to think about what happens when an ETF comes and what that does for a dynamic where there's a premium that could collapse and then there's no redemption feature on the end. It's not an insignificant consideration from a fiduciary perspective. And so I just want to make that point, before we close out today.
Okay, we're out of time. Donald, final closing remarks.
Yeah, I would just add that, despite my skepticism around cryptocurrencies, like I said, it is a big market. There's a lot of room in the market for alternative digital assets. What I would just encourage all of us as professionals to keep in mind is that, we have a very high standard of evidence, of due diligence, of fiduciary duty that we owe to our clients. And so to just always come back to what is the business case and try to separate, sort of that, the hype around something and really get into the business case around what is the asset, what is the asset class, how does it create value for consumers. I think the best argument I heard today was with respect to Tyrone, your comment around the unbanked. So that's what I'm looking to hear as a CIO. And so I would encourage all of us in this profession to, let's come up with the business case for this type of asset class.
Thanks, Donald. Tyrone, I loved that rant earlier. You got a few seconds. What do you got? Closing remarks.
There is a hunger crisis in America, and 1 in 4 children is going hungry. I'd encourage everyone to nokidhungry.org and please feed a hungry child. Thank you for the time. I appreciate you.
Thanking you, Tyrone. Brian, you want to any final thoughts?
Yeah, I think echoing other comments. I think it's our responsibility, obviously, as fiduciaries, to stay intellectually curious in this space. And be hungry to learn more so we can evaluate this, from the right investment thesis. And I think right now, currently, based on what's available, there's investment solutions and private placements that I think is the right direction to go, to meet clients' interests and also make sure that, asset classes in this space are appropriately diversified in things, within Bitcoin as well as outside of it as well, to be broadly diversified. So I think we keep doing what we're doing, asking all the right questions and coming together in sessions like this to collaborate. That really, helps to support idea generation and networking and really find out, what are the right risk and rewards for our clients.
Intellectually curious. That's one of the key things I love about this space. It sure is curious. Keith, I see you have yourself muted. You're next. You're last.
Great. Thank you. I think if we redo this panel 6 to 12 months from now, we will all be much smarter about this, which can only be good for our clients. And so agree with the intellectual curiosity. And we should just continue to keep learning about it because it is not going away, but needs to be done right.
Tom, any final thoughts? You can.
Yeah, no, I think it's just the whole infrastructure is so improved. And again, there are, as mentioned, Brian mentioned, there's lots of good products out there in addition, and we are looking at it's rapidly changing. So it's just exciting that there are. Galaxy's got lots of good products, other providers. So there's just other ways to skin the cat. So it's exciting as we look at where this is where this is going to lead to. So we're very excited about the prospects in crypto and Bitcoin.
Keeping us young and curious. Kent, any closing remarks?
Well, I'd just like to say, first off, thanks, Michael, to you and all of your colleagues at Bloomberg for putting this together. I think these are exactly the kind of forums and seminars that we need to have over time to build knowledge and improve the investment access that we all want our clients over time to have to these kinds of assets. And I would say that I think in addition to all of the other responsibilities that have been pointed out already in closing remarks, I think it's, as an industry, all of us as RIAs, it's our responsibility to keep on pushing our trusted partners like the custodians that have been mentioned today try and continue to, to lower the cost of access for this and provide, the most secure solution. So, I mean, for me, there's still concerns about, holding them in omnibus form versus, the concept of like allocated shares that we all know that we can own with gold if someone wants something super secure. So there's still quite a bit to sort out, to hold things on our clients in a fair and secure way. But I'm very excited for, what the future holds.
Thanks, Kent. And Charles, final words of wisdom.
Innovation. Bitcoin represents an amazing degree of evolution for payments, for the unbanked, for the global community. And to me, that represents a great statement about a bright future for global markets, for investors, and for the people, the undeveloped world, giving them opportunity and access to assets and methods that they didn't have before. So innovation, a bright future. That's, to me, that's it.
As expected, I got more out of this than I thought I would. I really appreciate everybody's time and participation. And I want to thank you. And I need to thank one key person, Bridget Welch, my colleague at Bloomberg, who helped organize this and who's in the office and is someone I can annoy on a daily basis. So thank you for that, Bridget. Everyone, thank you. And as a colleague, I hear Sam on his podcast. Peace.
Appreciate you. Love and light.
Thank you.
Thank you, everybody. Really appreciate
Thank
it.
you.